Welcome to Money Matters TV. My name is Paul Mitchell. I'm a commercial banker. I'm the host for this show. Joining me is my co-host, John Mason.
Paul?
John is with Seeking Alpha, and he is I'll call him a finance consultant expert. And John will tell us a little bit what he does to qualify, I think, that kind of a title. Lots going on in the finance world these days, John. Wow.
Sure is, Paul.
Lots of surprises and new things and whatever.
Got to hold on to your seat in this environment. Uncertainty just is ruling the roost right now, and so many things are going on that nobody has a real hold to. That as a consequence, a little thing happens and it changes expectations and markets move.
So what kind of markets do you follow, or do you consult on or observe on, or perspectives? Are individual stocks, or is it sort of a macro thing, or global or regional? How does that work in your field?
I have a tendency to work a little bit more toward the macro end. I'm interested in how the economy is performing, what's happening there.
The whole national economy.
The national economy and other economies. I've been in the Federal Reserve System, and so I've had a lot of experience in terms of monetary policy, and I've also been in commercial banking myself, so I have a great interest in the banking system. But financial markets in general is one of my interests. And
now, when you say markets, and you also said economies. I mean, I know the U.S. economy, and I know the U.S. financial market, but you said plural. What does that mean?
Well, this is one of the problems that we're facing right now. I mean, the United States, the economy over the last 10 years during this current economic expansion has increased at an annual rate of 2.1%. Not very good by historical records, but if you start taking that and comparing it with what's going on in the rest of the world, that the American economy has been relatively robust. And you go to Europe, and particularly now the stalwart over in Europe has always been Germany over the last decade or so.
Sure,
and Germany now is barely growing at all. Angela Merkel is having great deals of difficulty in terms of running her government, and after some really sterling years, a lot of people are asking her to resign.
Now, why is that? I mean, they make great products. They sell the products around the world. Great technology, sound engineering, that type of thing. Are they selling less out of the country? Is that part of it?
I think one of the things that they're getting hit by some of the world. They depend so much on export sports that they're getting hit by some of the difficulties in the economies around the rest of the world. And so as a consequence, their markets have not been as strong as they have been in the past, and so they're suffering from that.
But the U.S. is the largest economy in the world, and we're growing at 2.1%. So are we buying as much as ever from Germany?
No. Oh. And so this is part of the changes that are taking place in the world. It's just the whole world's in transition, and this helps to build the uncertainty that exists, that people just in building up their expectations for their business, for their investments, and for the other things that they do, they're just dealing with a more fragile environment in which small changes here or there can cause them to reassess their expectations and make adjustments to it. So it's really, really a different world, and of course the spread of the coronavirus has exacerbated that in the sense that it's created even greater uncertainties in the world, and we're experiencing that, for example, in our stock market. I mean, we've had three major changes in the expectations with respect to the stock market in the last 4 or 5 days. We had the very, very bad...
Our audience may not appreciate that because this may not be seen within a few days of these events, or even our discussion today.
The last week in February, the stock market took a huge tumble. And then over the weekend, the word got out that the central banks around the world were going to act in a way that was going to help to protect financial systems and protect economies from the downside as far as the effects of the virus might be concerned. Okay, so that's
What do they do?
well, it's not together clear what they're going to do. One of course, is lowering their policy rates of interest, which the Fed did
Of the
on
US,
Monday.
yes.
But the interesting thing there is the expectations over the weekend were to the fact that there was going to be a unified movement by central banks in order to
Around the world.
to work against
Yes.
the effects of the virus. So on Monday, the stock market went way up because they saw this unified central banking effort taking place. What happened on Tuesday? The Fed moved. The Fed dropped its policy
Right.
rate of interest by 50 basis points, but it was the only one that moved. What went through the market then was, well, if the Fed moved, and it moved a tremendous 50 basis
Right.
points, something must be more wrong with the United States
And-
economy than we expected.
And it wasn't during a regular scheduled policy meeting.
It wasn't
It was like an
during-
emergency
Exactly,
action.
exactly.
Wow.
So that threw the stock market off. So after the big rally on Monday, you get Tuesday, the stock market tanked
Yeah.
because now investors thought, well, the Fed is signaling that things are worse off here in the United States than we thought they were.
Wow.
And no other central bank is moving along with them, which we
So
expected.
we're talking about the stock market. That's one thing. I mean, as a commercial banker, I deal with small to medium-sized businesses typically. Okay, so my questions are, what do everyday business people like that think? Even with larger companies, what are they thinking? What are they doing? Are their expectations reflected in the stock market, or is it different, or what?
That's a very, very good question. Again, it's not a real clear, nice, concise answer because the bigger organizations and the like are the ones that have been going along, even at the modest rate of increase that the economy has been growing in. But there's been more and more evidence as we've gone along that the smaller firms, the medium-sized firms, and in effect, there was a major article in the Wall Street Journal on Friday that says that all the cities are not going along. You get some cities that are really, really bustling and the like. So there's a real separation that's taken place in terms of relative size.
Wow.
The in one case is that we're at a 3.6% unemployment rate. That's the lowest unemployment rate that we've had in 50 years. But the people that are able to fill the jobs that they need to fill now are the larger companies. Again, we're getting more and more evidence from the medium to smaller firms that they can't find the people that they need in order to fill their jobs. So there's a real,
Economy or something.
and this just adds to the uncertainty that exists because nobody can really count on the future right now.
Well, we have a question from one of our viewers, and he's looking for an answer. Mark James of Exton asks, what is a good financial plan, not investment in stock, but plan, for when the stock market goes down? Now, you've mentioned it's been up and down the last few days. Perspectives, not too long an answer, but
Okay, I am not one that thinks is real optimistic about the stock market over the next 3 to 6 months, and he may be looking for a longer term plan than that. But there's so much uncertainty in the markets right now. We have so little information on how things might work out here or what might even happen. I mean, we go back to Don Rumsfeld's, the way he classified things in terms of known unknowns and unknown unknowns. And we're just filled with unknowns, both known and unknown.
so it's
right
a
now.
matter of degree. We always have a degree of uncertainty, and now we have even massive amount of uncertainty.
And we having problems because, the leadership in the Western world. And I'm not talking just about the United States, but I'm talking about Germany, I'm talking about France, I'm talking about Great Britain, that we're not getting a picture that people can buy onto in terms of a steadier future.
So I'm hearing, Mr. James, maybe you better hedge your bets a bit. I mean, it doesn't mean sell everything, tomorrow. We don't hardly ever recommend that. We don't really know, but you might want to put a degree of your investments in cash to protect yourself.
Exactly. That's
maybe some more steady stocks, less speculative ones, things of that nature. We don't know, of course, the stock market's down, how long it's going to be down, how far it's going to go down. Nobody
All we
does.
know is in times of uncertainty, the volatility increases substantially. And over the last 3 weeks, you look at all the indexes that measure the volatility that exists in our financial markets, they have more than doubled in the last 2 or 3 weeks.
Wow.
So this is a thing that he or any of us would be facing in going forward, is whatever you do, it's going to be a much, much more volatile environment than it has been in the past.
So maybe to use one of your terms, if you're seeking alpha, you maybe experience a lot more beta these days.
You got it. You got it.
Thank you very much, John.
Sure enough, Paul.
And now we have the pleasure of moving on to our guest for this show. But in the meantime, if you do have questions of yourself to ask of Money Matters TV, here's how you do it.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Okay. Welcome back to the show. Now it's my pleasure to introduce our featured guest, who is Brent Byrne, President and CEO of Divi-Vest Advisors. Did I say that correctly?
Yes, you did, sir.
Okay, thank you very much.
Maybe I
Okay.
should have gone like this.
Probably a good idea. So you are also in the finance business,
Correct.
looking at the ups and downs and advising people. Tell us a little bit about what Divi-Vest Advisors does.
Well, I've been a registered investment advisor since 1991, and I primarily offer stock portfolio management to high net worth investors, institutions, Taft-Hartley plans.
What's a high net worth? $100,000?
$500,000 plus.
Okay. And Taft-Hartley is
Union.
okay. So big bucks.
Yes. Separate account management, portfolios all connected, but separately accounted for.
So we've been talking about, and viewers will have to acknowledge that they're not going to be seeing the show 10 minutes after the show is filmed. But the coronavirus is the big topic these days.
Yes.
Just massive impact on the stock market. We just had a discussion with John Mason about some of that global scheme. Do you get involved in investing globally, or pretty much the U.S.?
Only through U.S. companies that have operations overseas. So I don't have foreign holdings per se. I do have some ADRs.
ADRs are?
Well, American Depository Receipts on foreign companies, so you can buy them in the
Just
U.S.
trying to keep our audience educated.
But as far as the coronavirus is concerned, it's definitely having an impact on, more so on psychology than the economy. This morning we had a report where private payrolls came in February at 189,000. So it hasn't had an effect, and it's early, of course, to see how this progresses.
That's the number of new jobs, or what?
Yes, new jobs, 189,000.
Wow,
We had a service sector report in February that came in at a reading of 57 versus 50 being an equilibrium number, which was very, very strong.
So what period of time is that? What's the cutoff?
February.
Is that
That's for February.
okay? It's just a few days ago then.
Yeah. Well, it was just reported today,
I
and then of course new orders within that sector came in at a reading of 67. So we're humming along
Okay.
terrifically. And stepping back from just how the virus is going to grow, we just don't know. But
Yeah,
but in terms of the effect so far, you're not really seeing it from an economy standpoint. We have low rates,
Oh, very low.
lowest ever.
Amazing.
We have low gas prices. These
Sort
types
of.
of these types of things
That depends
are
how old you are.
well, and where you fill up.
Yeah.
But so you have a lot of very, very pro-consumer-oriented factors hitting highs right now, and we'll just have to see how that works. But
So how would you have answered Mr. James's question about what is a good financial plan for when the stock market goes down? Because you're managing stocks.
buy the dip.
We said we thought hedge your bets.
Well, if your horizon is a month or 2 or 3 months or 6 months, you shouldn't be in the stock market. From my vantage point. But since 1991, when I first started managing money, I've averaged over 10% a year
Wow.
net, and that goes through wars and crisis after crisis, a financial crisis, which was devastating.
Great recession, sure.
So
So you haven't sold half your stock. to put it in cash.
no, I would look to take advantage of the drop.
Okay.
If you're looking at stocks like Apple and Microsoft, trading north of 20 times earnings, and Facebook, north of 50 times, or Amazon north of 80 times, there's you're making a pretty strong bet, that things line up perfectly. Whereas I primarily concentrate in the dogs, the companies that are on their knees and are underpriced,
Yeah.
paying a good yield.
Value stocks.
And
Value
that
investing.
exactly. And now over the last 18 months or so, it's been a bit a rough ride. Although I was up 30% last year, but value has been tracking at about half, what the high flyers, the stronger S&P 500 has registered.
Ron, do you have any questions for
Well,
our expert here?
that gets into one question in terms of what's happened in recent years and talking about value investing and things like that. There has been so much money that has gone out of the value investors into the passive investors over the last
Yes.
10
Stock
years
index,
or so.
index investing.
Yes, index investing and that
Yes.
kind of thing, and passive asset management that works on the stock indices rather than on the individual stocks. What do you think about
Well,
that?
with
Brent?
passive, you can go value with passive. Even in the S&P 500, you're passively invested. You're going to cover value and growth within that sphere or that arena of stocks. You're probably referring to active versus passive.
Yes.
That whole question.
Yes.
And, it just depends. How you view the world. For somebody that doesn't have a lot of expertise nor a lot of money, passive investing is probably a good choice. But it is herd investing, okay? And I grew up in a time where herd investing was frowned upon.
Yeah.
But you don't pay, one of the concepts of that kind of passive index investing is you pay minimal fees as opposed to
Right.
a hedge fund manager that's going to run for president or something because he made billions of dollars.
Cost
on a hedge fund.
cost is a big it's growth plus dividends less expenses.
And over the last 10 years, you've had a stock market that has constantly been hitting new historical
Yes,
highs.
sure.
So that it's been a really beautiful time for passive investment in the sense that
Well,
the market is,
there's no question, it's definitely been a boon, for investors, and there are investors that I would advise to go towards that. But once you start accumulating some serious monies, there's, in my opinion, a better way to go.
So Brent, you've been in business since 1991. You've weathered quite a few storms.
And
What's
I
your
have the
secret?
scars for sure to
What's your
show
secret?
it. My red hair.
You're really only
Or
20
my it's
really only
graying a little
27
bit.
years old, but you look like you're 40.
Well, it's a unique business, okay, because I live on the river in Gladwin, so I wake up and it's
That's a
just
lovely place.
just beautiful, with all the wildlife
No-
outside.
No flooding, no.
And you step outside into your cubicle, wired up with your
Okay.
computers, and there's a hiccup in Italy, with the coronavirus, and
Yeah.
all of a sudden they're shutting down towns, and
Mm.
that reverberates around the world. Or Wuhan, where all this took place, and you rely on the Communist
China,
Party local chapter, to jump on it and
Yeah.
quarantine those people. Instead, they start kicking everything under the rug and
Yeah. Saying it's not that big a deal.
quashing the whistleblowers.
Right.
And now we have a global situation. So this business, you are plugged into the world, and
Mm-hmm.
to that extent, I'd rather just
So, can you ever take a vacation or what?
no. Well, if I do, I take my computer with me.
Yeah.
And your
And
well, it's very, very easy to get away, with
Okay.
electronics.
Mhm. So, the secret is just hanging in there and second to the plate, taking a swing, or
a good plan, investment plan is my
Okay.
strength.
covering what time
Again, total return is about growth plus income less expenses. That's it. Okay, you got to do every factor good. If you attack the equation from a growth standpoint, you're not going to get yield, because most growth companies don't pay any dividend.
Right.
Okay, but we know over time dividends can account for as much as 50% of total return.
Yeah.
Okay, so how do you do that? Okay, do you just turn your back on 50% of the equation and your opportunity? I don't think that's a good idea. As far as the cost, you brought up the cost equation with passive. That is important because it does affect total return. However, it pales in comparison to the growth and income components. Okay, so it's you're much better served, aligning your investments around growth and income.
So, Brent, you're not exactly a household name, but Warren Buffett is. Now, how aligned with his style of investing?
Oh,
is your style of
I
investing?
find a lot of my stocks in his portfolio. Coca-Cola, Bank of America.
Burlington Railroad, whatever it is.
Well, he owns.
Geico?
Well, he
Geico?
owns everything, so it's
Well.
it's difficult to compare. But sure, and he's concentrated. He doesn't own a lot of stocks. He might own 10 major positions.
Wow. For what, how many? $40 billion, or what's his portfolio?
Oh, hundreds of billions.
Hundreds of billions.
But through Geico.
Yeah.
So it's similarly situated. I might be a little bit more quantitative oriented in that I'll look for a stock that pays at least 3% before it even interests me. And that's just arbitrary. I want to
Well, that's a well-established company. Then you don't have too many 10-year-old companies, for example,
right.
paying a significant dividend.
Exactly. So you find yourself concentrated in mature companies, but the higher the yield, the more disadvantaged it is from a stock price standpoint. So you can get you can buy low and sell high. So that corners my growth attack on the equation. Using yield to buy low and sell high, but while I'm waiting for those companies to turn around, I'm being paid a nice rent. So it's sort of like a commercial property type approach.
When you do your stock picking, do you actually talk to management yourself?
Only when I get angry. I rely on their words in their conferences. I for the most part, value what they have to say. They're the best situated, to provide insight as to what's going on in the company. Mostly I just look at the numbers and concentrate on.
Well, talking about words and promises and all that type of thing, perspectives and all, how do you see the elections later on this year affecting the stock market? Because we hear a lot of words of various kinds from a lot of different people.
Well, there's no question. Whoever gets in there, or President Trump remains, we do have a balance of power, separation of powers in Washington. So they're going to be hogtied to to an extent as to what they can get done
Mm-hmm.
and what their aspirations are. So,
If I may jump in here, I
Sure.
mean, here's another change in expectations. I
Yes.
mean, 3 days ago, Joe Biden was considered to be out of it.
right.
Joe Biden is now back in it,
Front
and
runner.
looks like he's kind of controlling the future and so forth. The
Mm-hmm.
rumor is that with that change in expectations, that's one of the major reasons why the stock market's up so much today. And it seems
Possibly.
like the stock market has favored Trump and has done very well in Trump. We get this particular move that Biden looks good for the stock market.
Well, versus Bernie Sanders,
Versus Bernie
who's
Sanders.
a confirmed socialist
Yes.
with
Well,
soc-
and that was the point.
socialist policies and
Revolutionary.
look around you. Look at the majesty of America. It wasn't born through socialism. It was born through hard work and entrepreneurship
Right.
and having a vision about America. And that's
But it
important.
hasn't always been pretty.
What is
Immigrants have been always spit upon.
Mm-hmm.
Lots of the robber barons, the richest people in the world 100 years ago, had people working 60-hour days, I think, or
Right.
20-hour days, 6 days a week, 7 days a week, et cetera, et cetera, et cetera. No benefits, no nothing. If you fell off, that's goodbye.
Mm-hmm.
So it hasn't always been pretty. I mean, I am a capitalist, but I'm just saying that
Right.
as majestic as everything is.
Well, there's no question. For every story of rich and fame, the Street of Dreams is littered, with fallen soldiers.
Sure.
But I guess you got to take the good with the bad.
It's still, it is the best place in the world.
It certainly is.
Well, it's better to have the stock market going up than not going up.
Yeah. Well, it is very
But in a
difficult.
controlled manner, because you don't want too much spike, because then you're going to have a calamity or something like
But
that.
this is one reason why I think that has been so much attention given to the Fed and the faith in the Fed. I mean, I think Powell has built up a pretty good credibility over the last couple of years with what he's done. But basically, Ben Bernanke set out with the recovery to basically underwrite the stock market increase, and it has been the major support
With the low interest rate.
to the economy over the last 10, 11 years.
Well, low rates are a plus,
Mm-hmm.
for capitalism. And actually, in my opinion, it helps out on the inflation front too.
Yeah. You can buy a house, you get a 3% mortgage versus when I used to get a 7% mortgage.
Right.
I mean, I don't know, it could be $100,000 or more house, something like that.
Well, that's another advantage with these low rates. I mean, look forward to a great housing situation.
Terrific. Well, something to look forward to. Okay, Brent, thank you very much. We have to
Appreciate it.
and end our show. And John, thank you.
Well, thank you.
And just remember that on this show, your money matters.